first home, seeking out information about home ownership, and the home buying process is your first step. Before you make one of the biggest and most impactful purchases of your life, you need to understand what it takes to become a homeowner and why home ownership is worthwhile. And that's where the experts come in. In this guide, you'll find expert insights and research to help you learn how to get started, what you need to know, and what you can express or expect from the process. That way you'll have confidence as you take this important step forward. And I'll introduce my all-star loan officer here in a few minutes. Remember to please click on the chat icon, ask us anything. Tony Henderson thinks something's funny. You guys are moving to DFW, open, DFW, Las Colinas for 8+. Tony Henderson said 3.5%. You want to get that, Blake, for the
3.5% is the minimum down payment for FHA, but conventional does have home ready and home possible that we'll talk about, and that does go down to 3%. So yes, very, very close, very close. So it does sound like you've done a little bit of research, done your homework a little bit on this. So that's good. We like educated buyers.
Yep. That's awesome. Okay. So remember to be excited. Remember to click on the chat icon, ask us questions. Remember to go to toddpoorrealty.com, book a one-on-one phone call. I just added this to the slideshow because this is the #1 question, or everybody I call, 80% of them say, well, I'm waiting on the market to crash. And it's just getting ridiculous. So the first thing I always ask is, what is your source? Where did you hear this? And I get the most ridiculous answers. Oh, my neighbor, he knows a lot about real estate. Oh, I saw it on YouTube. It's a big rumor that's going around. On YouTube, there's a lot of people that are twisting true information around to try to make it sound like the 2008 collapse. But mortgage standards are nothing like they were in 2008. Mm-hmm. One of the biggest factors in the last housing crash was loose lending practices. Almost anyone could receive a mortgage with no money down. Now standards are much stricter and buyers are better qualified. So what that was all about is they were just handing out loans like crazy, and then people were getting foreclosed on because they couldn't afford it. Prices are not accelerating out of control. In a normal market, the average home appreciates 3.5% year over year. Prices are rising a little more than that in our market, but the difference isn't huge. Home values are currently rising at a healthy and sustainable rate. Right now, we're going through a correction in the home prices and stuff. So it's coming back down to almost normal. It's still up 4% from last year, but we don't have a surplus of homes on the market. Before the 2008 crash, we had too many homes for sale. We definitely have a housing shortage right now. Increasing wages are keeping homes affordable right now. While home prices have been increases, wages have been keeping up with the pace. Mortgage rates are still low from a historical perspective, so it's still relatively affordable to purchase a home. And homeowners right now have tons of equity. During the last crash, most homeowners didn't have much equity. When prices dipped, most of the people had to enter foreclosure. Now homeowners have tons of equities, so even if the prices fall, our market will be okay. So right now, half of the people that own a home right now have paid for half of their house. That's the biggest difference. Yeah, and if you guys have any questions, remember to put them in the chat. Motorola Moto is going to Cedar Hill. And book a call, a one-on-one phone call. Just click on the calendar date. Go to toddpoorrealty.com/book. I'll put that in the chat again here in a second. And now we're to Dallas Fort Worth first time home buyer class. That's what this is all about. I'll skip that for now. This is likely the biggest investment you guys will ever make. It's a great opportunity to build generational wealth for your family and the future of your family. You guys are probably concerned, stressed out, intimidated, anxious, and uncertain. As a first-time home buyer, guess what? You're going to feel a lot of emotions, and you may be asking, will I get approved? Am I going to be able to afford my dream home? You know, like the one that you played with as a kid with Ken and Barbie. And you may be stressed out. Maybe you didn't get the first home you wanted, or it's been a month and you still haven't found the perfect house. You may be intimidated, you know, like David and Goliath in this crazy market, which is now turning from a seller's market into a buyer's market. Buyer's market means there are more buyers than sellers, which makes it easier to buy. No, right now there's more sellers than buyers. You may be anxious and uncertain. You may have to wait 3 or more days to see if your offer was accepted. I even get really stressed out in these situations. It's normal. And this is my awesome team. I'm Todd Poor with TD Realty. I've been in the real estate business for 15 years now. I do have a background in building homes. I also started a tiny home business in Midland for the oil field workers. And I employed only addicts, alcoholics, and people with felonies. And I'm planning on doing that again here. I am 6 years sober from alcohol. I do a pre-inspection with a video of the home. Every time I go to look at a home, I can inspect it. So you don't put in an offer not knowing what's wrong with the house. And I'll make a video of it so you can rewatch it. Nicole is my transaction coordinator that keeps all my contracts in perfect order so I can't make mistakes. Not many agents have one of these. And then there's my expert loan officer that goes above and beyond for my buyers and myself. He's saved a lot of deals for me. I don't get paid a dime for any of the deals I do with either one of these people or from you. You don't pay me or Blake anything. The seller pays us. So it's free. A realtor's free when you're buying. Here's some of my client reviews. I'll go through these quickly. Oh yeah, don't forget to book a one-on-one call, toddportrealty.com/book. We're about to get into all the useful information. So if you guys have a pen and paper and take some notes and utilize the chat, ask us anything. At the very top, I posted a link to all my reviews. I've never had anything but a 5-star review. I think if you could go above 5 stars, they would. He talks about this pre-inspection up front. He talks about Blake. I've gone through about 6 loan officers, and Blake, I've stuck with Blake because he'll answer the phone any time of day or night. He's always there. He'll jump on his computer in a heartbeat. He beats everyone's rates that I ever have or compare because he compares over 10 different banks instead of comparing one bank. Kristen, she's a huge fan. I got her this 2,200 square foot home, brand new, 3-bed, 2-bath. And she just her and her husband cooked me dinner about a month ago. And we really keep in touch. And right now her mom's looking to buy a house. So what are the steps to home ownership? Remember to book a one-on-one call. I know I've said this a million times. toddportrealty.com. I'll put this in the chat. The times fill up quick. Remember to utilize the chat. First-time home buyers, you know, they're often intimidated, and it's very personal to trust us with everything. It's important to have a team of people that all work together. I have my title person that I use for everything. have my transaction coordinator that puts in all the offers, takes care of the paperwork. I have Blake. It's just important to have people that work together. You know, you get a random guy from a bank, you get a random title company, you get a random this and that, and it doesn't always go smoothly. It definitely doesn't. So, and so getting pre-approved is the biggest thing I can recommend before you even go look at houses. If you try to get pre-approved and you don't, it's not a big deal. Just see what you got to do and get after it. You know, if it's fixing your credit, anything like that, we can fix your credit. We have credit repair too. Blake will point you in the right direction on what you need to do to get your loan and everything straight. If you go look at a house and you fall in love with it and you haven't been pre-qualified, you're not going to be able to put an offer in. And a lot of times homes have offer deadlines. So say it's tomorrow at 5 o'clock and it's on a weekend. Well, if you're going with a bank, you can't even talk to the bank till Monday morning. And then it'll take a few days to get pre-qualified. So you always want to be ready. And we'll cover all that here in a minute. Getting pre-approved. So I can't stop thinking about you, Blake, and your new haircut. So I'm going to turn it over to you.
Well, I appreciate that. Thank you very much. Thank you for all the very kind words. It's a pleasure working with you as well. We make a good team. And, you know, like Todd said, you do need a good team to get this done for you. So yeah, step number one, schedule a mortgage planning session with me. And you do that through Todd Poor Realty /book. So get on there. He's going to find out your goals. He's going to find out some of the details of what you're looking for. And then he's going to start honing that in, and he's going to send you over to me. And that's where we hit step 2. And that's getting pre-approved. And like he said, it might not be right. It's never a no. It's a not right now. If we need to put you on a mortgage plan of action, we can do that. Again, we got a great team with Rachel Padron is our credit repair specialist, and she is amazing. So we do get you pre-approved. I'm going to look into the first-time home buyer qualification for you. If the state wants to give you money to buy a home, we might as well utilize that and see how much we can get for you. So now we're pre-approved. We got you some first-time home buyer grants. And number 4, you get to get back with Todd and go house hunting. That's the fun stuff. You get to go look at all these houses. You get to find out what you like, what you don't like, split bedrooms, how big of a backyard, how small of a front yard, and all that. Once you find that home that you love, you're going to submit an offer with Todd, and he's going to negotiate the terms for you. So there's a little bit of back and forth there, figuring out how, you know, the seller wants to sell it and how you want to buy it, make sure everybody's happy. And then you get under contract, everybody signs, we have it all nailed down. And so this is where the fun really begins. After you sign it, you got about 30 days, and then we're going to get you moved in. And in that 30 days, we are number 7, finalizing the financing. I'm going to ask you for all sorts of extra paperwork, to make sure that we're meeting all the guidelines for the loan program, and everything's going to be catered just to that contract for you. After 30 days goes by, you get to close. You're going to go sign a bunch of paperwork, and you're going to get the keys. You're going to high five me and Todd at the closing table, and then you're going to go move in. Number 9, you get to enjoy your life after making a great investment. Working with us, but there are some mistakes. So we're gonna cover those real quick. And mistake number 1 is ignoring the first-time homebuyer incentive program. So let's get into that. What is a first-time homebuyer grant? Well, it is specific to your region. It's broken down by county. And it is dependent on your income. Now, what they do is they take a median income of each county, and they come up with an income limit. So it is dependent on the counties. people in the median income in Dallas County is a lot more than like Wichita or Wise or Jacksboro. So there are those different limits there. Now you can get a grant or a forgivable second mortgage. And that means it's generally 3 years. If you stay in the home 3 years, you don't have to pay it back. But within those 3 years, if you refinance or sell the home, you do have to pay it back. And these first-time home buyer grants, down payment, forgivable second mortgages are down payment assistance. So it does help you with that 3.5% of the 3% down payment. So it's down payment assistance. So here's an example. Anita wants to buy a home, and I got her approved on an FHA. The purchase price of her new home is $300,000. The minimum down payment, like we talked about earlier, is 3.5%, which comes out to $10,500. Now, FHAs, they do have an upfront mortgage insurance cost of 1.75%. And after we factor that in, the total loan amount is $294,566. Now, the incentive that I got her qualified for is 5% of the total loan amount, and that comes out to $14,728. So, with the total down payment now covered by the incentive, there is $4,228 left for closing cost. That could be title fees, that could be escrow fees, that could be origination fees. It all just goes to helping you get into that home.
Okay, so FHA upfront mortgage insurance costs 1.75%. That's an upfront cost. Are you saying it can roll into the loan?
Absolutely. Absolutely. Great question. So that is the only upfront cost or closing cost that is charged that can be rolled into the loan. Absolutely. So we do take that extra money, roll it into the loan. Excuse me. If you want to pay it at closing, you can. You're more than welcome to do that, but generally we just roll it into the loan for you. It just helps out a little bit. But all the other closing costs do need to be paid at closing. But yeah, great question on that.
So I'm just going to give, I just had something with a client just recently happen. And Chris Fung, this isn't answering your question. This is something different. So this house was $200,000, and we could tell that we could probably get it maybe 10,000 less because it had been sitting on the market for a little while. And so my client didn't have a ton of money for closing costs. She was paying title insurance and things like that. And so, cash at the very end that she had to pay. So I said, you know what we can do? We can offer the 200,000 and then ask for $10,000 and sell their concessions. So what you're doing is you're really paying 190, but you have that $10,000 they give back to you, and it goes into the loan. So you're paying 200,000, they give you $10,000 back, and that can cover your closing costs. So you don't have any cash out of pocket, or you have very little. If you ask for a lot, you can actually buy your percentage rate down on the loan. You can buy your percentage rate down 3% the first year, 2% the second year, 1%, and then by then interest rates should be low enough that you can just refinance and lower your, so it's easy. And it's very easy to buy right now because everyone's waiting for the market to crash, and you get your selection. 6 months ago when it was busy, you had to put an offer in, and basically take what you could get and pay more for it. Right now, you can really customize. I want this fireplace, I want this gas grill, I want this, and get it at a discount price. If the market crashes, like 80% of the clients that I talk to say it is, What do you think's going to happen when it drops $20,000 or so? All these people that are waiting are going to jump right on it. And it gets busier in the summertime anyway. This is a slow time. So what do you think is going to happen to housing prices if it does crash? That means it's not going to crash. It's just going to be like 6 months ago again. Anyway, I'll move on.
Yeah, very good point. That is a very great way to negotiate the contract to help out with closing costs. And another great point that you made right there, Todd, is first quarter of next year into spring, into the early second quarter, we're going to see a lot of people come back on the market and buy. So there's never a such thing as too early in the real estate business. Definitely keep that in mind. But moving on, types of mortgages. We have 4 basic types of mortgages. Number 1 is conventional, and that is a Fannie Mae and Freddie Mac. They make the guidelines. Who here has heard of Fannie Mae and Freddie Mac? I know you have, Todd. Well, Fannie Mae and Freddie Mac, they make the guidelines for conventional loans. And with that, they tell us your loan has to fit in this box, and let's figure it out. Tony Henderson has, okay. And so these are the guidelines you have to go by for a conventional loan. And they are government-backed entities. Or government-sponsored, I should say. So number 2 is FHA. And this is a government-insured loan. Which means there are a little bit different guidelines than the conventional loans. And with that, the government insures the loan. Should the loan go in default, the government is there to pick it up and make sure that everything is a-okay. Number 3 is USDA. That's another government insured loan, and it is area specific. It is specifically for rural areas, for the growth of rural areas. Now, this is a 0% down loan. So if you are buying in a rural area, I'm definitely looking into this for you. It makes things a lot easier at the closing table for you. But again, it has to be specific. You get on HUD.gov and see exactly where that is. Buying in Dallas, that's not a rural area. Buying out in Granbury, that's a rural area. So number 4 is a VA loan. How many veterans do we have with us? Any
veterans out there?
Well, if you're with us, thank you very much for your service. And this loan is an amazing deal for veterans, and you guys deserve it. So it's only for qualified veterans and active duty military. Again, 0% down. And the interest rates on these right now are amazing for you guys. So again, thank you very much for your service. We do appreciate it. So now these may vary depending on the lender requirements per each bank. So definitely keep that in mind. So the Federal Housing Administration loan, an FHA loan, provides mortgage insurance on loans made by FHA approved lenders throughout the USA. And that's this guy right here. I do that. FHA loan requirements. So in these, a lot of these requirements, actually these requirements go for all loans. So number 1, we do need your driver's license or identification card. We need to know who you are. We do need your social security card. We do run credit with your social security number, so we need that card. Number 2, we need 2 years of residential history. So we're going to ask for every address you've had for the past 2 years. And then we're also going to ask for the name and address of employers for the past 2 years for income verification. Along with the income verification, we're going to need 2 months of your pay stubs and to check assets, to check your funds to close. We do need bank statements for the previous 2 months as well. So for the work history, which is part of that income verification, we need 2 years of W-2s. And For our self-employed, we do need copies of your most recent tax return. Now, sometimes we do need the profit and loss statement for the self-employed, but initially we won't ask for that. It depends on the business and how we're using your income if we're going to need that. And additional income such as child support payments, social security benefits, alimony, stuff like that. Any sort of insurance that you're collecting, we can always use that for income. And then a list of assets like, do you have a rental home? We'll be able to see if you have the car on your credit report, but anything that's bringing more income in, or you're putting monthly payments into it, definitely need to know about that. So how do the first time home buyer programs work? Well, Freddie Mac and Fannie Mae do both have their Home Ready and Home Possible, and that's that 3% that I was talking about at the very beginning. And then the FHA home ownership is a really great one. I use the down payment assistance programs in tandem with FHA more often than not. So benefits of an FHA loans. I'll answer your questions here in a bit. That's a really great question. Yeah, I'll answer your questions here in a bit. So the benefits of an FHA loan. It has a low 3.5% down payment with a score of 580, with a credit score of 580. You can also have a credit score as low as 500 with 10% down. Now, keep in mind, these are rock bottom scores. We can get it done with this, but the loan is going to be more expensive. We want your credit score at least around 620. 640 is like 640 and above is the prime, but if we can get you to 620, we'll be doing all right. So when we say 580 and 500, those are rock bottom. And with the 500, you need 10% down. So there is easy refinancing with the FHA, with FHA Streamline. Low mortgage rates. FHA loans tend to have low mortgage rates. FHA tends to have the lower mortgage rates than conventional loans. Now, there are higher DTI ratios accepted with the FHA. Now, who knows what DTI is? Okay, well, that is debt to income ratio. And the way we figure that is we take your, there it is, there new. We take all your monthly payments, your car payment, your credit card payment, your student loans, stuff like that. Things that you've been lent money on, basically. We don't use bills or rent or stuff like that. So we take that and then we divide it by your monthly income, and it gives us a ratio, and there are ceilings on the ratios for that. Now, you can choose between a 15 or 30-year fixed rate or adjustable rate term. We aren't necessarily in the adjustable rate market yet. Interest rates have not gotten that high that we need to start looking into that. So we don't do a whole lot of those. So we do keep it fixed rate. Now, the down payment assistance programs or grants are accepted with FHA loans. One of the great things, and this is what Todd was talking about earlier, is the seller can pay closing costs up to 6%. So with that deal he was talking about, he offered $10,000 more on a $200,000 loan. Well, 6% would be $12,000. So they're still under that threshold, and they were able to use that $10,000 towards their closing cost. And in the market that we're in right now, and especially because it's the slow season, it's prime time for that. You can use that to pay title, you pay title, pay your escrows, pay your origination fees. Oh, or you can, if you want to pay all those three, you can use it to buy down your rate, which helps out. So those are some really great benefits for the FHAs. So conventional loans. A conventional loan is a home loan, a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender like me, or the two government-sponsored enterprises, Fannie Mae and Freddie Mac. So conventional loans are great loans. They're really great for investors. They absolutely are, and first-time home buyers. We can use some down payment assistance with those too. Absolutely. So let's look at a comparison between FHA and conventional loans. So the minimum down payment for FHA, for the FHA loan, is 3.5%, and conventional is 3%. Minimum credit score is 580 on an FHA and 620 on a conventional. Remember, these are rock bottom for the best interest rate, for the best deal possible. We want your credit score as high as possible. And the max debt to income ratio for FHA is 55% and 46% with conventional. So the loan limit for 2022 is 420,680, and on a conventional it is 647,200. Now both of those are going up, and as of right now we can use those loan limits for people who get under contract here in December that are closing in January. For FHA, they're going up to 470, and for conventional they're going up to I believe it's about 715. So really great news for that. Anything above that is going to be considered a jumbo, and there are different guidelines. So income limit. Now the government and then Fannie Mae and Freddie Mac, they don't care that you make a lot of money. They want you to make a lot of money, so they don't put the limits on here. Now these income limits are with the down payment assistance programs that we were talking about earlier, and it is county specific. These are pulled from Dallas County. So the income limit with down payment assistance on an FHA is $97,400, and with conventional it's $76,480 with the down payment assistance. So the minimum out-of-pocket contribution for each of these is that down payment, the 3.5% and the 3%, and they can be gift funds, grants, or the forgivable second mortgage that I spoke about earlier. So what can you use for down payment and closing costs? Well, we're going to ask you for those bank statements, and generally people give us their checking and savings account because that's what they use the most. So we will need the 2-month statements for those. You can also use your 401k or any retirement account you have. Now these generally have terms of withdrawal, and we have to abide by those. So the terms of withdrawal will be required. So like sometimes you can only take out 60% of the funds you have in there if you're under the age of 65. So we would have to, take that into consideration. Your down payment and closing costs can also be a gift from a family member. We will ask for financial statements from that family member. So as you're talking to mom, dad, aunt, uncle, sister, brother, grandma, grandpa, remember to bring that up with them. And keep in mind, some of the older generation has an issue providing that information. So I think that upfront conversation with them as you're talking about the gift funds needs to be had. That way they can kind of be ready when, your favorite loan officer that they don't know, ask them for this documentation. And one thing that Todd and I do say is, as you're going out and looking at these homes and getting pre-qualified and really starting this process, talk to everyone, talk to them. Just say, hey, I'm buying a home. You'd be surprised how many people are willing to help you out and help you get into that home. So gift funds for family members is a great way to go. And the last but not least are stocks, bonds, and cash. Now, when it says cash, it's not cold hard cash. You can't walk up to the closing table with $10,000 in a duffel bag and plop it down. It's in the form of a cashier's check. We will need the financial statements for that. And with a cashier's check, we just get it out of your bank. We just look at your bank statement and see that's been withdrawn. So you can't take that cash and that duffel bag and then go get $10,000 worth of money orders at Western Union either. So we can't document that. It has to be documented. So things you cannot use is another loan. Can't go down to the credit union and get that $10,000 you need, because that's going to show up on your credit. Now we're looking at a higher DTI, and that's a problem. Same thing with the credit card. Can't use a credit card for it, or undocumented cash. And the thing about documenting the cash is, with the Patriot Act, once that was instated, they put this in place that we have to paper trail where money is coming from and where it's going. That way we know no one is laundering money or funding terrorism at that point in time, which, I know you guys aren't. Todd knows you guys aren't, but the banks and the government, we need to make sure that they know, and everyone isn't either. So buyer's eligibility based off underwriter review. Now, who knows what an underwriter is? That's always going. We get great answers for this. Tony knows. I feel like Tony's done his research on a lot of this stuff. I feel like he's ready to go out there and buy a home. I like it. Well, an underwriter is the person that I hand your loan to after I structure it, get all the paperwork lined out, and get everything, everything the way it should be. I hand it to the underwriter, and they go through the loan line by line, page by page, and make sure that everything meets the guidelines for the program I have you set on. And if there's anything that they have a question about, or that they're unsure, they're going to ask for an explanation, and will give us what's called a conditional approval. You're approved, but we have to meet certain criteria. A lot of it is like verification of employment or a letter of explanation, simple stuff like that. But what they look for is, number one, your ability to repay the loan. So that's through employment verification, total income, monthly debts, and proposed monthly payment. And that gets you the DTI, like we talked about earlier. So in the employment verification is, it's a page we send to your employer, and they fill it out just to back up what we got from your pay stubs and stuff like that. Your willingness to repay the loan, credit reports, payment history of previous loans, rent, bills, etc. And also, what is the property being used for? Are you moving in? Is it an investment property? Are you buying a home so your children can have a place to stay while they go to college? Are you moving mom and dad next door? Stuff like that. If you're buying it to move in and to move your family in, you're more willing to make that payment every month because you don't want to be homeless. So that does factor in. And the last one is the collateral. Is the property eligible for the loan? And once we get that appraisal back, that will determine the value. That will determine the value of the home. So if it doesn't meet value, we can reach out to the appraisal company and see what happened there. All right. I saw a bunch of questions come up.
Thanks, Jess. He's booking a one-on-one call. He's got to go see his kids.
Go get it, man. I'm
Responsible.
a dad myself, so I get it. All right, let's get back to
Las Colinas.
Dallas, Texas. Is the incentive amount coming from the first time home buyer grant? Chris Fung, is the incentive amount coming from the first time home buyer grant? So the incentive amount, there's different percentages of amounts, 2, 3, 4, or 5%. And I always go with the highest percentage amount that we can get you qualified for. I always go that route, make sure that's a good deal for everybody. So I'm not sure as to your question, because you're asking, is the incentive amount coming from the first time home buyer grant? And I mean, the incentive amount and the grant is kind of the same thing. And the amount of the grant, I will definitely talk through with you as we're getting to that point. Is it possible to get 2 FHA loans? So there are guidelines with FHA loans. Number one, you cannot buy an investment property with an FHA loan. You can't. Number two, if you do have an FHA loan on a home, then you cannot buy another home within a 100-mile radius of that home with another FHA loan. They have to be far apart like that. So it is possible, but there are guidelines that go into that. So keep that in mind. My suggestion is, if you're looking at buying multiple properties, there's a thing called house hacking. So buy one, live in it for a year, and then go buy another one. If you bought the first one with an FHA and you're looking to buy the second one with an FHA, after that first year, just kind of refinance this without anything out of pocket into a conventional, and then go FHA so you can get one close by. Or if you want to buy one in another town and so forth, that's your prerogative. What about credit scores at 730 plus? Man, I wish everybody had a 730 plus credit score. That would get you a really, really great deal. So anything above 700, you're going to get the absolute best deals out there. And it goes up, I believe, in 40-point increments. So from like 680 to 720, and then from 720 to 760 is where it gets really, really good. So what if you went from a W-2 to a 1099? That is a really great question. So when it comes to the 2-year employment history, when you go from W-2 to 1099, you're essentially going from being employed to self-employment. And we need the 2-year history to show the bank that income is going to continue. So you would have to be 1099 for 2 years before that income would qualify for you. Now, if it was the other way around and you went 1099 to W-2, that's a different story, because you were working for yourself and now you're working for someone else. So it's less of a liability in the eyes of the bank. One thing is, if you're within the same industry and there's the shuffling around from that, with lenders like myself, we might be able to work with that. We might be able to use 1 year at that point in time, depending on the specific scenario. So as we're going through this, please keep in mind that your specific loan scenario is not going to be the same as someone else's. So if someone else gets this amazing deal, that isn't necessarily you're going to get the same deal. And vice versa. If they just got an okay deal, you could definitely get a better deal. So it's very situation specific. But that was a really great question. Absolutely, really great question. With student loans being in default, will that affect us? So what happens with student loans in default? I have to, so if it's in default, it is a derogatory trade line on your credit report. So that's definitely going to affect your interest rate. Now, if you meant the student loan is deferred, as in you don't have a monthly payment right now, that still will affect you. I cannot use a monthly payment of 0 for an FHA, or excuse me, for a student loan. Apologize. For a student loan. I have to use 0.5% of the total amount you owe. Now, the way around that is an income-based repayment program. So more than happy to get more in depth with you on any of these questions, but definitely book that call, talk to Todd, get on the phone with me, and we can look into your specific situation and make sure we're getting you a good deal on that. We'll book. Saw somebody 30K in closing. Is that normal? Seller. Seen sellers pay 30K in closing cost. Is this possible? Absolutely. So if the home is $500,000, they can pay up to $30,000 in closing cost. Well, let me think about this. And that would no, because that's more than the FHA loan limit. If they're paying 30, if the sellers are paying 30,000 in closing costs, that's going to be on a conventional. And conventionals are 3%. So that's
Hey, Blake.
that's a great deal for that person. Yes.
Oh yeah, I was going to say, so that's what we were saying about seller pays us, the buyer doesn't pay us anything. So when you commit to sell a house, you commit to a percentage of what you sell the house for. So the normal standard in Texas is 6%. So like he was saying, a $500,000 house, 6% of that is 30,000, right? So
yes, but it's going to right around that's more than an FHA loan limit. So that would be I'd like to see that loan, honestly, and see that deal, because that's interesting. Yes, we can get the sellers to pay that. What is the lowest income made you were able to get a home? I'm driving, hope that makes sense. So you're asking what is the lowest income that I have qualified someone on. It's situation specific. So with the DTI, that's why we use your income to make sure you can pay it back. So if you've got a low monthly income but hardly any debts, like your DTI is still going to be really good. But if you make a lot of income and you've got a lot of monthly debts, your DTI is going to be huge. So it's going to be hard to do it. So again, situation specific, but book a call, book a call, and I can definitely talk you through your situation.
hey, you want to answer these questions in a little bit?
Yeah, we can come back to these.
Yeah, we'll come back
to these. Yeah. Okay, cool, man. So mistake number 2, not getting pre-approval. Todd did bring this up earlier. So pillars of the mortgage approval, credit, income, and down payment. We need to make sure you have good credit. That credit score is what banks look at to make sure that you are less of a liability. You're less of a risk to lend money to. Income, they want to make sure that you are going to pay back the loan. And down payment is how much are you willing to invest initially to get in this home? So loan pre-qualification. Pre-qualification helps you determine how much you can afford to spend on a home based on these 3 factors. Your credit, we talked about that. Credit score, what your report says, and your total debts. That is your credit history, and that is why we use that and why banks look at that score in that manner. Your income, so employment history, like we talked about earlier, and your income calculation, which I will do. More often than not, people are like, I make $3,500 a month. And then I calculated, well, they were thinking before taxes, and actually after, or they're thinking after taxes, and actually before taxes, it's closer to 5,000. So we can get you in there a little bit easier. Number three, your assets, money used on your down payment and closing costs. So that's why we ask for those bank statements. So pre-qualification can help you. There's a lot of really good things that it does for you. It determines what house you qualify for. You don't want to be looking at $450,000 homes when you're only qualified for $375,000. You could get into contract at a $450,000 price, put your option money down, and then find out that the financing is not going to work on that, and you lose your option money. So let's make sure we keep all that money in your pocket, or it's being put to good use. And let's figure out what you qualify for first. It can increase your bargaining power when negotiating with the seller. And what that does is, after I get you pre-qualified, I will give Todd a form filled out specifically for the property you want to put an offer in on, and it's signed by me. It's got my pretty face on there, and it says I went through everything that this buyer gave me, and they are qualified for this specific property. It really just helps strengthen everything. And on top of that, it estimates your monthly payment and your total investment. I will put a presentation together to show you exactly how much you're spending on the home through the life of the loan. And plus, if your comfortable monthly payment is $2,500, and we start looking at different purchase prices, and it comes out that your monthly payment's going to be $3,000, that's kind of a problem. We don't want to put you in a position where you're not comfortable, making these payments, or you're what they call house poor. We don't want to do that. We want you to go on those vacations and have amazing Christmases and all that fun stuff. It will help me identify which loan product will fulfill your needs. Are we going conventional, FHA, or should we look into VA or USDA, or are some of the other non-QM products that we have to get you in that home? So loan pre-qualification tips for a simple loan approval. And this isn't just for loan approval. Once you get approved, you need to stick by this as well. So through the whole process, you are good to go. Do call us if you have any questions. At any point in time through the whole process, call us. Todd always answers his phone. I'll always answer my phone. And if we don't, leave us a message, send us a text message. We will get back to you ASAP. Continue living in your current residence. Don't move until closing day. Make sure that you've got that overlap in there, because you don't want to end up homeless. That would not be good. Or staying in a hotel for a couple of weeks. Todd and I actually ran into that situation a few months back. And it wasn't a smooth process, and people were having to stay in homes, and Todd and I had to step in and save that deal. I think Todd saved it more than I did, but that's just his awesome negotiating power. Continue paying your mortgage or rent. If you start getting late on any payments, it will show up on your credit report, and it will knock you out of pre-approval. Continue to use your credit as normal. Again, make those payments. Keep working at your current employer. Now, some people do move or do come or have been moving to Texas for a job, or moving out of Texas for a job. And that's a specific situation that we can handle. If you know that you are going to be transitioning from one job to another, like seamlessly through the process, be upfront with us about it. We can work on that. But to make it as simple as possible and as easy as possible, keep working at your current employer. Number two, keep your same insurance company. They know you, they know the payment you like, they know what you need to get insured. Now, if you aren't happy with them, we've got a great guy on our team named Gavin. He's an amazing insurance agent, and he can get you what you want. We can definitely help you out with that. Again, we got the team to get you guys in there. Stay current on all existing accounts. Make those payments. Keep making those payments, and expect requests for additional documentation throughout the process. Again, when the underwriter comes back with those conditions, they're going to ask for, hey, we need a letter of explanation for this 6-month job gap, or we need a letter of explanation as to why you went from one industry to another, or stuff like that. A lot of times the additional documentation is super simple, or we have the 2 months bank statements and pay stubs. Well, we need to refresh those halfway through the process to make sure everything is still good to go. Do not make any large purchases. Absolutely do not. Wait till we close. Wait till after the loan is funded to buy that refrigerator, those new washers, dryers. Do not, don't buy that pool until you are closed on the home and the loan is funded. So we need to keep your finances intact the way they are through the whole process. Do not change bank accounts or make any large cash deposits. If you make a large cash deposit, we now need to source those funds. Just like the Patriot Act, we now need to source those funds and figure out where they came from and why they're coming in. Don't transfer balances. If you're going to use money from your savings for a closing cost, don't transfer it to your checking to write a check to go to title for closing costs. We can wire that from savings to title. There are always ways around it. If you have any questions on that, make sure you do call Todd or myself. Don't close any credit card accounts. This goes back to continue to use your credit as normal. Do not consolidate your debt onto 1 or 2 credit cards. This starts messing with your credit score and your DTI. And again, we need everything intact. Do not apply for new credit or take out a new loan or co-sign on a loan. So you're buying a new home, and that Porsche is going to look amazing out in front of it. But let's wait till the loan's closed and funded before we go buy a new car, because that will definitely hurt things. You'd have a great brand new car. Well, there goes your home, because now we don't qualify. I've heard horror stories of people stopping at the dealerships on the way to closing and buying a new car so they can go close on their house and then drive to their new home in their new car. Do not do that. Absolutely do not do that. Now, this last one you should really never do. Never max out or overcharge your credit card accounts. It's really hard to come back from that. As market interest rates rise, so do credit interest rates. Look at your credit card interest rate now compared to what it was a year ago. I guarantee it's higher. They fluctuate with the market. So definitely keep that in mind. All right. Mistake number 3, using your bank. You've got that favorite teller there. You know all of them. They're very nice. They're really great with your day-to-day, but there are some things that using your bank for a home loan, there are some things that will really, really kind of make it, more expensive and really kind of hard on you. Bank penalties are expensive. Most banks do charge an origination or discount point. So the rate you would get with me is going to cost a little bit more with your bank. The idea is for us not to spend your money, but to get you in a home and with the best deal possible. Large banks, you're just one of thousands of clients. To them, you're just a number. You see the same tellers every day, but those are the tellers. Those are your friends that you chat with. The loan officer there, you're just a number. They go through many loans a day, and you never ever get to speak to the same person again after the initial approval. It's really unfortunate. Large banks do typically have stricter guidelines that will not cater to specific situations outside their general box. If your loan doesn't fit this, that's a no. And what's great about lenders like me is I work with 10 different banks. So I can find the best one for you. And I've got a great relationship with my underwriter. So in the process, when she's like, hey, we can't do this for A, B, and C, I can pick up the phone, give her a call, say, hey, you know, so and so, here's the situation with them, and that's why it is that way. And these are the steps that they are taking to correct it, or whatever it may be. And a lot of times the underwriter's like, okay, I need a letter of explanation on that. We're good to go. Large banks may not offer the down payment assistance programs. So a lot of times they don't want to take that extra step to get you that state money to you know, put money down on your home and invest in a new home, which is really kind of unfortunate. And the programs are out there. We should definitely use it.
Hey, I just want to, yeah, do not use your bank. Your home bank, whether you've been there for 30 years or you just walked in the door, they're going to give you the same type of loan. They don't have to disclose how much they make on the loan. You may pay more than you need to if you don't shop aggressively. So I would recommend, once you apply for a loan, save all the paperwork that you gave them in your computer or outside, and then go check with another lender. Once you apply with a lender, you have 30 days basically to go apply with a bunch of other lenders, and it doesn't affect your credit at all. Always compare with Blake. It's a little extra work, but just a fraction of a percent can cost tens of thousands. It's worth the small amount of work really for what it is. A bank may not approve you, even if you're a good candidate for financing. Some need immaculate credit. And like you were saying, some of them don't work with first-time homebuyer grants. So once you get a loan with anybody, it's always good to go compare with different lenders. Blake compares with 10 different banks instead of one. And 9 times out of 10, he can beat their rates. He can save you tons of money. That's why I'm stuck with him. All right.
All right. Mistake number 4, buying directly from a builder. The truth about buying straight from a builder. The closing cost assistance can be bait for a higher interest rate. Builders are there to sell homes and make money, and they're not going to give you money for free. It just doesn't happen that way, unfortunately. So keep that in mind, you know, because that will cost you more money in the long run with that higher interest rate. I've seen they're like, oh, we'll give you $10,000 towards closing costs. Well, it's built in other places. So be careful with those. You know, and one thing too is a realtor works for you and a sales agent works for the builder. So like Todd was saying, you don't pay us. You don't pay Todd. You don't pay me. And we don't get paid until you close on that home. So, you know, we're fully invested in getting you the home that you want. So we are working for you to get you in the home that you want. A sales agent works for the builder. So we work for you to find the one home that you want. The sales agent works for the builder to put bodies in that home. To them, it doesn't matter who goes in that home. They just want to put someone in there so they can make their paycheck. So just definitely keep that in mind, you know, and I'm sure they're nice people, but that's their job. You know, that's their job.
Yes. So me, a realtor, we would know what's included in the base package and then what's a little extra for this. And sometimes they'll just put a different kind of countertop and charge you like $40,000. You really need to know all those differences. It's like jumping in shark infested water without a cage. I don't know, but and then the quality of construction. How familiar are you with the builder? What's their reputation? What's the quality of their construction? Like I said, I have a background in building. I'm very meticulous. And I know a lot of builders. I know most of the builders in DFW. The contracts, how familiar are you with a real estate contract? Do you know what to look for to make sure you're receiving all the benefits you're supposed to receive? Are you aware of any hidden fees or community fees that might pop up? A real estate agent is an expert in the industry who is there to provide guidance throughout a real estate transaction. Once you get to the builder, register your realtor immediately, because if you don't, they'll just let you're out looking for houses. Oh, I have a realtor. Some of them will say, oh, well, it's too late, you already registered. They'll try anything they can to get you to not have a realtor. If you want someone to look out for your best interest, tell the builder on your very first visit that you're already working with an agent. The commission and the price of the home won't change just because you're not working with a realtor. It might change because of negotiating power. So yeah, that's that. Skipping a home inspection. The cost of skipping a home inspection, it could cost you tens of thousands. And that's another thing with a builder. They'll say, oh, it's a brand new house. You don't need to get your own inspection. They do things like that. You need to get your inspection no matter what, no matter if you're buying the house as is, and they're not going to make any repairs. You still want to get an inspection. Unaware of deal breakers. There's no telling what you might find if you buy the house and go and move into it later and have no inspection. You lose your negotiating power. So once you get a home under contract, you have an option period. In that period, that number of days is your option to back out of the contract without losing your earnest money. So during that period, if it has all kinds of problems that pop up in the inspection that you didn't know about, you can ask them to repair all this stuff before you move in. Or you can ask them to give you money back. I've had a lot of clients, their roofs, really bad damage. We didn't know that. And I made them file it on their homeowner's insurance. And they put a new roof on the house before my clients moved in. And it didn't cost my clients anything. You risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide.
Hey, Todd, what is radon?
Radon is a gas that it's usually formed when the foundation has cracks going through it, or part of the wall is exposed to dirt. It's released from dirt and in the contact with the concrete. And it's actually the #2 leading cause of lung cancer in the United States.
Oh,
No
wow.
joke. So you don't know if there's cracks in the foundation underneath the floor. You never know what you're going to find. You can do a radon test, carbon monoxide, mold. I mean, it's all really dangerous. Forecast of future repair costs. I can usually give you an idea of what this is going to cost to repair if you want to remodel. And illegal no-code additions and remodels. When you enclose a back porch or a garage and turn it into a room, you have to have permits for that from the city. And they'll see that your house is expanded, but you didn't get a permit for it. And then they can fine you for those things. Choosing the wrong realtor. Tell you that the main thing in finding a realtor, communication. Communication is key, and experience. I know you.
Well, I'll say this: if you choose anybody but Todd, you chose the wrong realtor. I know that.
Thanks. Yeah, and a lot of people say, "Hey, I'm trying to help out my niece. She just got a real estate license, and it can turn into a total nightmare. And I'm having to actually walk the other agent through the process and trying to teach her how to even do the contracts. Whether you're looking to buy or sell, it's always important to have the right real estate agent for you. A lot of people answer the phone to the first person that talks to them, and then they're like, oh, well, I already promised this person that, you know, they called me before you. And it's like, okay, what do they offer? I can tell you what I offer, and I don't know any real estate agents that offers as many different things as I do. You want someone you're comfortable with, someone that has the right credentials and experience. I posted my reviews on at the very beginning, only 5-star reviews, areas of expertise. There's a lot of really good realtors out there. It's not hard to get a good list of realtors with great credentials, but you may not meet their expertise. You need to figure out what kind of buyer you are. Are you an investor, home buyer, or selling an estate? Know what type of service you need so you can critique realtors on their skill set. I specialize in first-time home buyers. Have they done the time? Do they have the experience? Ask questions about the tough times and how they dealt with them. How long they've been in the real estate or the industry, and their current role as a realtor. Are they too busy? Too many clients is usually not a good thing. Some realtors cope better when they're on the run, very busy. Others provide better service and take your calls. Like me and Blake, we take your calls day and night, anytime.
All the time. All the time.
Use a local realtor. Don't waste your time with someone who's not working in the area. We mentioned that earlier, the need for experience and knowing the area. Make sure they have a good track record. Verify if they're alone or as a team. It's great to work with a realtor who has a team. You got to make sure it works for you. It should be understood up front that everybody's going towards the same goal. We all need to communicate. Like Blake knows his underwriter. That means he can pull some strings that other loan officers can't and squeeze you in to qualifying for a loan in different situations that most loan officers can't. Most loan officers will give you a budget, say, okay, you have 300,000, and that's basically all they tell you. Blake is more of a loan officer and a financial planner. He's not going to let you get in a bad situation. Go use your maximum amount that you're approved for, and then you can't make the payments, or you're just not ready for it. Yeah, it's good to have people that are close with each other.
Absolutely.
Crime rates in Dallas, that's because of the airport, but we can go over different crime rates, what neighborhoods are best. This is a soil map. There are a lot of foundation problems in DFW. We can look to see if there's a potential for foundation problems. Niche is a great website, you know, where you can see public schools, all those different things. That's a good place to search if you haven't heard of it, NICHE. And how do you guys feel now? Are you guys excited, confident, informed? Did you guys book a call? Ask us any questions in the chat right now, and we'll get.
I'm excited.
We still have a few questions left.
Yeah, let me get those pulled up. Absolutely.
But basically, I try to keep all my transactions.
Informed.
I consider them successful when we actually build like a lifelong relationship and stay together and become good friends. For sure. Yeah. Be sure to book a time. toddpoorrealty.com/book. We'll talk one-on-one. Don't be scared, even if you're not ready yet. You know, if you're buying in 2 years, it's still good to look at your situation and know what you need. You can click on the calendar and choose your time. We probably have it pretty booked up so far. You want to answer questions real quick?
Absolutely. There's some good ones in here. Same industry, been W-2 for 21 months and 1099 for 2 months of 2 months of the year. Okay, so we would definitely have to look at that. There are some different programs that we could use to where we wouldn't have to necessarily use W-2s or 1099s. Maybe just tax returns of the last 2 years and bank statements, something like that. There is a way to get that done. So it would definitely, we'd have to see. I'd have to look into that as far as W-2 for 21 months. So, and then 1099 for 2. Going 1099 for 2 months is going to be hard. If it was like 6 months to a year, we could probably get that done. But book that call. Let's dig a little bit deeper into your situation, and let me see what I can do on that. Like I said earlier, maybe it's not a no. Maybe it's a not right now. So let's go ahead and get the application, the documents, and see what you need to do to get ready to buy. If it's just waiting, hey man, we got your file on, we got you on file, ready to go. We just need to wait. But I do need to take a look at the whole picture. So definitely book that call. Shan Muka, if my net income is 9.6K per month and home for 610 is possible, no debts at all, and for a first-time home buyer, absolutely. So we go off of gross income. So if your net income is 9.6K per month, that means you're probably a little over 10 for maybe 11 for the month. So yeah, we always use the income before taxes. So with that, that's definitely possible. That is definitely possible. Now, for first-time home buyer qualification, I'm going to go ahead and say you're probably making too much money. So you might not be able to get the grants on that, but it depends on the county you are looking to purchase in. So the median income would have to be super high. But again, book that call. Let's talk that through. Student loans are a drag. They can be. They definitely can be. So, but there are ways to work with them within these guidelines and within these programs. Absolutely. So hey, glad you guys are feeling informed. That's what we like. That's a lot of reason why we do this. An informed buyer is a good buyer. We want to make sure that everyone's a good buyer. Let me say that. But an informed buyer, it takes a lot of stress off of you guys if you know what to expect going into this, because it is like swimming with like just jumping in and swimming with the sharks. Financially you could get eaten alive. So that's why you need professionals like Todd and myself to be that cage, and get you that home that you want. But glad you guys are informed. Any more questions, just shoot them out there.
Hey, I didn't know if anybody had questions about Divvy Homes, Home Partners of America, lease to own programs, NACA, Bank of America, any of those.
Yeah, because you're
Do what? Blake froze. Does anybody want to unmute themselves and just have a conversation? I'll give you the option to unmute.
I say you're set up with all those.
Yeah, I'm set up with all of those. You're wondering about the Bank of America zero closing, no PMI.
Yeah. I seen that a few months earlier. I just ain't know too much about it. I seen a lot of going on with it.
Yeah, it's it's targeted for specific areas and demographics and things like that, but anybody can apply for it. what we would do to start off is I would give you the number, you would make a phone call to them. They would kind of get all your information and get you set up. You would tell them that I'm your realtor, and then you go to a workshop here in Dallas, go through that program, learn everything. And then they'll tell you if you're qualified, how much you can spend, and then also what neighborhoods. There's actually a way to search which houses in what neighborhoods and things like that. They do have a lot available, but it's a process. It's usually takes a few months. NAC is very similar to that, but I would recommend, if you have the down payment and things like that, to go FHA, but because it's hard to qualify for. They don't look at your credit. Your credit doesn't matter to them. It's mainly your debt to income ratio, and if you've made payments on all your bills, all those different things on time. But yeah, book a call. We can talk about it.
Question, like if you are trying to do like home buyer, grant, programs, would it be best to go on and start like going through them now, or you know what I'm saying? Because I know a lot of people, like, they use like their taxes, to kind of pay for their down payment and stuff like that. What would y'all should suggest in a sense?
Did you get that, Blake?
One more time, I'm sorry. For the down payment assistance?
Yeah, so like with like some people, like I know myself, like I would use like my taxes or something like that to pay my down payment assistance. But with the programs, like myself, I'm a professor, so like we have like school programs and things that they offer money in different scenarios. And so did y'all see that y'all have like, different programs that y'all offer, separate from, from us. So just trying to see, like, would it be best to, like, in a situation to go on and apply and try to go through a program, or just kind of, you know what I'm saying?
Yes, absolutely. Because some down payment assistance programs are better for situations than others. I do have, I am set up with 7 different ones. So I always check around for best rates, most down payment assistance that I can get you. So if you can get a down payment assistance with like your job or whatever, like I would definitely ask them as well to give you like all the fine print on that and find out exactly what you need to do for that, what they need for that, and the process. And get that over to me. Let me look at it because that might be the better way to go. Absolutely. If they are, I would say, let me see the paperwork first, because I don't think they would have to pull credit on that. More often than not, they would have to be in contact with me during the actual process, which is fine. Sure. Absolutely fine. Yeah.
Okay. Well, yeah, like I talk more in the one-on-one. I you know what I'm saying? So I talk more in the one-on-one.
Yeah, it's again, it is situation specific, and the idea for Todd and I is to get you the best deal. So if we can do that going that route, we definitely will. If we can do it going like T-Shack or something else, we definitely will. Yeah. But yeah, book that call, man. Love to sit down and talk with you about it.
For sure. Yep. Any other questions? Credit repair, NACA.
Motorola Moto G just said NACA.
Yeah, NACA is actually very similar to Bank of America. Does it say? Oh yeah, it says Bank of America and City Mortgage. Yeah, so they've committed 13 billion till 2027. The thing about NACA is it's a lot longer process. You do the workshop at the beginning, and then you have another workshop. It's just a longer process, but it's basically the same thing. I would, if it were me, I would go with trying Bank of America. You can do both of them at the same time and try to qualify, but NACA is a lot of work. I mean, you have to have time to put in the work to do this. Bank of America is a little work too. It's not like just going to Blake and getting a loan to go through. It's a process. I've known people that it took them, they didn't have a lot of free time. It took them 8 months to do NACA. And the quickest I've heard so far or seen was 3 months to get through the program and get qualified. But it's not easy. So Bank of America is a little shorter, a little bit less work, but still going to be some work involved. Did that?
What about
Sorry.
what about T-Shack? T-Shack.
Yeah, the Texas State Affordable Housing Commission. Yeah, that's one of the ones that I use a lot for the down payment assistance. That's one of the better ones. I always start with T-Shack to see what I can get for you. Yeah, I love their programs. Their grants and their forgivable seconds are amazing. They really are. They're easy to work with. We've been actually my branch manager has been set up with them for 8 years now. So we've got that working relationship with them, and we can get stuff done pretty quick with them. Yeah, good question.
Any more questions, guys? And Tony, yeah, we can book a three-way call with me and Blake, or I can switch you over to him. We'll get it figured out. We'll get you a house. Did you had questions about selling a house earlier? Yeah, it costs to sell a house. There's a lot of people that try to do for sale by owners, so they don't have to pay the realtors, but they have a lot of trouble getting their house sold. That's for sure. I don't know what, I think like 70% of people that list their home for sale by owner end up using a realtor to list it, something like that. But Shamuka, yeah, we can go look at $600,000 houses. I'll take you around to look at them and give you tours and things like that.
Yeah, sure.
Sorry? I'm posting. Let's navigate the market for the best deals. Yeah, I mean, it's a good time for good deals. Houses are cheap. It all depends on what you're trying to do. If you're investing or looking for a place to live, but first-time home buyers grants and things like that are going to get you the best deals. Over 50% of the houses on the market right now have seen a price decrease. So there's a huge selection, not many buyers. It's a great time to buy for sure. And especially like $600,000 houses. There's not many people out looking for $600,000 houses. 6 months ago, you take a $600,000 house, and right now, I mean, it's 550, 525. It's good. Do I